Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, Luke, we're live. First video podcast. How's it going?
All right, it's going good, man. How you doing today?
We're doing really good, kind of like the hog market. So we're doing the Hog Market Talk podcast here. So let's just do a little breakdown on how you...
Before we do, two things we're thankful for. We're thankful to be doing the podcast with you, Mike. But I tell you what, sitting here in Laverne, Minnesota, I'm thankful we're inside, heated right now. What is the temps outside right now?
Negative 20 outside this morning on the way to work.
That's frosty.
That is plenty frosty, so good day to be inside for sure, up in the Northwest Corn Belt. The lean hog market been pretty hot lately. Kind of the opposite of that.
We've got some really good underlying things going on, and some good things in our market, good things to be excited on, and futures is pricing in some good things for sure. Mike.
Yes, it is. But let's start with what you were doing most of this week, Luke. Tell me about your time in Iowa this week.
Yeah, absolutely. So this week was the Iowa Pork Congress. It's held in Des Moines, Iowa. It's one of the bigger winter shows. It's always a great event, and thank you for all our customers and all our allied industry friends that came by and saw us at our booth. We had some great discussions, saw a lot of old friends, a lot of current customers, and met some new people on the way too, Mike. So as we went through the show, again, our industry, we've got manageable supply, we've got outstanding demand, we've got good forward profits, corn's reasonable, meal's reasonable, right? We have a lot of things going good for us. So, hot topping points, kind of through the industry. The cash hog market, it's kind of been slow to come because packers have been kind of playing it close to the vest, but we had some 86s and we had a little better cash. We had a few more players in the cash hog market. Actually got some numbers to print this week, so encourage more packers to get in that negotiated space and continue to feed the volume like that's supposed to be. But cash hog's good. Wean pig market, probably the talk of the trade. I mean, the wieners traded, we're hearing 115s,
wow.
110s, 113s, but it's a big number, right? So high demand for wean pigs right now. North Carolina has been having some pretty good breaks, but it's North Carolina. It's not uncommon to have breaks there. And the Eastern Corn Belt, some breaks in the Western Corn Belt as well.
Just PERS?
PERS mainly, but PDV is worse this year than a year ago too. We did hear of just here midweek here or this week some PEVD breaks down in Oklahoma. But long story short, wean pig demand is insatiable. I mean, $110, that's a big number to pay for a wean pig. Long demand lists, short show lists, Now, with all that said here, I mean, you can get all wrapped up in, $100, $110 wean pigs, but we also have $109 July futures, $108 August futures. We also have reasonable cost of productions, right? So, if the hog market was 90 and corn was $5, it'd be a different number, right? But definitely around a little under break even, but it's not uncommon to not have much margin in a summer wean pig either. So, rolling back into this, let's take a step back into where we're sitting. The hog market's in a great spot, still industry, supply neutral on the sow herd. There are a few sow farms that are going to be built in 26. I think more likely weaning pigs in 27, but largely we've kept our sow inventory in check. Meat demand still, pork's in a really good spot, competing well against beef. We're seeing more demand for more pork cuts, like the butt, the picnic, the ribs. I mean, just finding more space. So pork demand's in a good spot. Corn's reasonable. It makes sense to make them big. So weights are heavy, but there's a logic behind it, if you will.
Is weather affecting that this week a little bit?
Oh, a little bit. Yeah, cold is a little bit tougher, right? But I mean, it will, it'll make the trucks a little harder to start in the morning, and you have to make sure you got your number one in, right, and all that. But we can manage
sportive.
it. We can manage it. It's different than cattle outdoors or something like that. We're pretty confined industry, but it had to take a little bit of kill off. But all in all, it's good. So we're super excited about that. The biggest differentiator, I mean, 2026, the futures curve has already given you a phenomenal opportunity to hedge, right? And there's been a lot of hedging at these kind of prices. We're big fans of it. Industry's taking advantage of it, right? What's going to define your actual 26 results is your health status, right? How healthy can you keep your sow herd? And it's kind of like the tale of two sides, right? You've got the farms that are humming, and they're really humming, kicking out lots of pigs, but we've subjective also. Is the season right? And, we get asked all the time, is PERS worse than last year? Is it not worse than last year? And so that's a subjective, hard thing to answer. I mean, I would say from my perspective, let's just compare this year to last year. All right. So last year PERS started in September, which was really early. This year, there were a few October breaks, but it really kind of kicked up in November. Right. So I'd say since November, PERS is similar to last year. Last year was bad. So, the two worse than the 5-year average. Definitely some health challenges. PEDV is a little worse year over year. That one actually shows up in the University of Minnesota database. That's a little easier to track on PERS positive, stable, not positive, stable, all that stuff. So definitely some health demand, and it's reflecting in the weaned pig market. Usually the weaned pig market, what's going to be really interesting is we're starting to pull into the August board, right? And so usually you got another couple, 2-3 weeks, and then you usually get a seasonal drop as weaned pigs pull off the October board, right? Now, October, it's a different beast than it used to be. We use a lot of cutout, which is great. Big fans of using cutout in our price discovery, but it's making October act a little more like a summer month than a winter month, just because of the function of how all that works. But to me, what's going to be the interesting is is PERS worse or not than a year ago? How long does it last? Last year, PERS went to July, which that's really long. Usually we're cleaned up by then. Well, we're breaking hard again this week. The bug is tough. So how's that all shake out? We'll see. But you roll it back around and you look at these kind of, 108, 109 numbers. October broke that 90 number. Deese broke that $80 number. You've got July corn on the board at 443, Deese corn at 455. That's some competitive cost of productions. A lot of great opportunity out there, Mike.
Well, despite the overbought conditions in the hog market here, I'll have Cade pull up like the February or June futures chart here, for example. But, April hogs gapped new highs yesterday. We're finding some support there in that market. We've had no meaningful corrections really since mid-December in this hog market, and speculators are still adding to some of their long positions, Luke. So I'm just curious on what your take is on the condition of these futures markets fundamentally and technically.
Yeah, I think it's 114. There's room to run up to 114 in the summer contracts from a chart perspective, like I think we're showing you here on the screen, right? And all the things are happening. The cash market's coming. Cutout, is coming. So yeah, I think we can push up a little higher here, Mike. I am, so some optimistic. Now, you always get to, people like, 130 and all this. I'm not saying any of that's impossible, right? But at 108, 109, we have good things dialed in. But yeah, no, I'm a little optimistic. The Feb at 88, the index is trading 82, 83.
That's been impressive. A lot of people, I think, thought that was going to stop around 85, didn't they?
Yeah, it did. But, pigs did tighten up. I remember it was the week of New Year's, which hogs are always, selling for the first week of the year. And that was the week where it went from I wasn't getting many calls from packers to packers said, hey, we need a few pigs, right?
Yeah.
And so pigs are tight, supply is manageable. And I think that we're having to work a little harder, the packer that is, for pigs. And you always, once you turn New Year's, it's always a little different feel than Q4, Christmas, New Year's, Thanksgiving,
Kate,
all that
pull up
stuff.
the hog slaughter chart on Power.
Yeah, good job. Pull up hog slaughter chart. So as it's coming up, what he's going to show you is it's not uncommon that, those are our toughest times. The Christmas, New Year's, snowstorms. That's when it's always the toughest to get hogs in. And usually as we go in, through Q1 and into the spring, supply gets more manageable and things get a little bit easier. But we still need Saturdays. And that's what some of these packers are bidding up to fill. I think my case in point is we've had a few Saturdays canceled, Mike, and it's a little early to be canceling Saturdays. And the reason they're canceling is because they're getting that hog to come out. Now, there's reasons. Health has been kind of challenging. So inventory is a little tighter. The futures curve is really, really high, Mike. So it's telling you to keep putting weight on them, right? Corn's reasonable. It's profitable to do it. And then also, if don't sell a pig light. Like nobody's going to go to 270. They're going to push up a little higher to 295 if you have a choice, right? And then if you have to buy some spot pigs to fill in a healthful or whatnot, they're $100 or better, right? So just it's been a little harder to pull pigs forward. So we're seeing a few Saturdays knock off. Scheduled, try to do the Saturday, couldn't get them bought because they have to pay too much to get them in. Cut that back in. My point with that is, and the pork cutout drives our pricing. A few less Saturdays too. That's supportive to the pork product. product, and that that can help maybe get that product already really good in the mid 90s, but maybe get that kicked up.
It sure hasn't moved a lot lately. It's been 94, 93 forever, I feel like.
It's forever. It's for a while, right?
Yeah.
I mean, but it's still we're in a good spot. We're in a good spot. So, I think, kind of just taking back, I've put a lot of bullish stuff out here today, and I am excited, right? But again, these forward margins are outstanding, right? If futures make sense at these levels, I would say, even though I think there's some upside. Windows make tons of sense, right? But why do we hedge, Mike? Why do we manage risk? It's for the things we can't see coming, right? Everything we can see looks really good, and let's use it, let's push it. And the harder this thing keeps running, the better chance. I mentioned 26. The board's given us great opportunities. We can stay healthy. 26 set up to be a good year. The longer this thing runs, give us a runway into 27. Let's keep pushing it out. Give us a runway into 27. Watch things. I mean, clearly, export, we still got to clear export. USMCA, it's going to get renegotiated up by July, right? And Trump's already working on that. Anything you say Mexico and you're a hog producer, you got to listen. Ears up, right? And so,
next week's huge. Trump's in the state of Iowa making a speech next week. Location is yet to be determined. Main focus is going to be on energy, but who knows what he'll throw in on the USMCA deal or potentially like E15 year-round, things like that.
Absolutely. And, Mexico structurally, our hams work great to Mexico, but it doesn't mean if we get in a little political turmoil, they can't slow up purchases for a month or two or whatever that may be. So, just watch that, keep doing the right things and taking risk off the table and keep hammering forward. But, man, 26, I mean, it is really shaping up to have a lot of exciting things for the pork industry, Mike.
That it is. And, we talked about it before. If you do get some of these things come in, we are very overbought today now, technically. So a big enough pullback pretty quickly would come pretty quickly.
Yeah, give ourselves some position, some opportunity to manage our positions, right?
For sure. Thank you for your time today. I appreciate it, Luke.
Thanks, Mike. Take care.
Thanks for listening. This podcast is available on Spotify and Apple, and now it is launched on YouTube. This week going forward, every podcast will have a video format available on YouTube as well to discuss charts and other things that we can show you while doing our podcast. Thank you for listening.